Good morning, everyone, and welcome to the Sirius Report. My name is Ken Shorjan. I'm here with the illustrious Paul. And Paul, the number I want to throw out at you today is 1 trillion. This, of course, is for all intents and purposes, the exports for China are now globally. I want to thank you for being a part of this great discussion. And I'll tell you what, for all the rhetoric and blustering that the new Trump administration is talking about going after China with tariffs, et cetera, I really don't think it's making even one little dent in the process.
No, well, firstly, obviously, thanks for joining as well, Ken. Always a pleasure when we get together. And yeah, we thought we'd talk about the fact, for all the nonsense that we keep seeing, and this has gone back 2 decades, quite literally. And every time something happens in China that someone perceives to be of weakness, they have to try and capitalize on it by making ludicrous statements like when Evergrande problem surfaced. Oh, China's going to collapse. It's its Lehman moment. And strangely enough, it never was its Lehman moment, as we pointed out from day one. And in fact, China's now, to all intents and purposes, sorted out its retail and commercial real estate bubbles. The market now seems to be behaving itself far more normally, unlike the West, which just keeps inflating bubbles because China's economy is not built on financialization like the West. It's built on the simple premise: let's manufacture and produce stuff and then try to sell it at a profit, both domestically and, of course, internationally. So, yes, China's trade surplus was, to all intents and purposes, $1 trillion equivalent, because bear in mind, they don't trade in the dollar with many countries now. Or certainly I should rephrase that, to a large extent, or sometimes a lesser extent, they trade in non-dollar terms. So that's just an equivalent figure. Now, to put this in context, it's a record high, and it rose by 10.7% year on year. So much for China's economy collapsing when its trade surplus is increased by 10.7% to a new record high. That is not indicative at all of an economy collapsing in any way, shape, or form. In fact, it's the exact opposite. But this is the ongoing problem we find with Western commentators, etc., because as far as they're concerned, the Western economy and financialization is the only way to run an economy. And anyone who does things differently, they don't understand, or they just ignore. And they compare apples with oranges when they think that China's economy is also apples, when it absolutely isn't. And this leads to this endless misunderstanding, deliberate misinformation and propaganda, when all the data that comes out demonstrates quite clearly that China's economy is very strong. And it's also worth mentioning the following, and we have said this previously: China, every single year for at least a decade, probably a lot longer, underreports its GDP. Why? Because it wants to make the yuan weaker, because it benefits it as a nation who has a trade surplus of nearly $1 trillion equivalent. So that is why they do. So they don't want to have a strong yuan. And if the yuan becomes too strong versus the dollar, for example, then the PBOC will step in and advise state-owned banks to, whichever way they want to move the currency, either buy yuan or sell dollars, or sell yuan, buy dollars, etc., etc. So that is a very, very important point to reiterate and make, because China is perfectly capable of moving the currency one way or the other. At the moment, China is quite happy for it to be at about 7.3 against the dollar. That's probably more or less the sort of top end in terms of the weakness of the yuan against the dollar. I don't think they'd want it to be too much weaker. And if so, they could move it a little bit the other way. But the idea China's currency is collapsing is ludicrous. We've talked about this recently. but I want to make a point about that a bit later on. But we want to initially, of course, just focus on this $1 trillion trade surplus. And I want to pick out some data which shows how, in essence, and we've talked about this, that China is beginning to change its trading partners very subtly. And this has been going on for a few years, particularly, I would say, since the Trump administration decided to launch the somewhat futile trade war with China back sort of 2017, around that time, or 2016.
Yeah, absolutely. And it's kind of interesting, as I mentioned, that President-elect Trump, and especially many of those he's brought in for his economic advisory board, the Treasury, the Secretary of Commerce, or the assumed the Secretary of Commerce, they all are focusing on China. And, obviously, Trump has decided to use the tariff bat rather than, the carrot and the stick, the tariff bat to try to impose his agenda to make America great again. And I think you hit on a key point. The West, and especially the United States, have jiggered their economy, or at least their perception of the economy, to be this mode of financialization. While China, of course, is a standard 50s, 60s, 70s, 80s type of economy about productivity, being a debtor nation versus a creditor nation, and they're not really internationalizing their currency, so they don't have to deal with that type of headache. But the key thing is the U.S. now really only does, and I think you pointed us out before, only does 3% of business with China. 3%. And yet they've attempted to limit and ban any Chinese technology such as semiconductor chips. They put a ban on their EV vehicles being imported. They're putting a ban on almost anything that China is superior to the United States in. Now, it's kind of interesting that the U.S. has a tendency to make claims that China is incentivizing its industries. But when you have something like the Inflation Reduction Act or the CHIPS Act by Congress, which put tens, if not hundreds of billions of dollars into incentivizing its own companies, then the hypocrisy there is out the window. When you also take a look at the fact that China has just come out with a sixth gen aircraft and has hypersonic technologies. The US is spending, probably from its government angle, maybe 100 to 300 times more than China does. What's the budget of Russia in regards to their war? It's barely over $100 billion, while the US military is up in the 900 billion to a trillion range. And yet the technology, the productivity, the actual output that's coming from the United States spending more money, I equate it to the education system. We keep pumping more money into education, and yet the grades and literacy levels are going down. So with that being said, the U.S. is not going to be able to compete in any capacity with China in the future, except trying the old ways of using tariffs, using force, using coercion to force nations to buy their products when they've got alternatives, not just coming from China, but much of Southeast Asia, the ASEAN nations, the SCO, energy from Russia, energy from West Asia, all these different places that aren't living under that financialization, but are simply doing the standard model of productivity, selling at a good price, and trying to keep their stable currency so that the trade arbitrage is not really that big a difference. Is it any wonder that Europe is falling into absolute a morass, and the United States is having to face the reality that they're no longer the biggest industry and the biggest economy in the world, but rather they're trying to hold on to that title without really doing anything tangible to get it.
Yeah, absolutely. And I think there's quite a bit of data that's worth assessing in this $1 trillion surplus with China, because there's a big play made about China's relations with the European Union. It's worth noting, if you look in 2024, its overall trade with it grew just 0.4%. Chinese exports were up 3% versus obviously the figure in 2023. But tellingly, Chinese imports from the European Union were down 4.4%. So the EU trade deficit with China in dollar terms for 2024 is nearly $250 billion. It was around $220 billion in 2023. So that deficit was up over 12.5% year on year, meaning from 2023 to 2024. And there are some very interesting data within that, because China's annual import from Germany fell over 10.5%, from France 5.9%, and Italy about 3.3%. And they're just some obvious ones. So Europe's losing market share in China, but ironically, Chinese goods continue to grow in terms of sales in Europe. I mean, so this is a huge problem for the European Union. And they can sit there and pump their chest out and make all manner of statements to the Chinese, but they desperately need Chinese imports. Yes, they could do with exporting more to China, but the problem they've got is it's just that simple fact of expensive energy. So they're not competitive the way they were. And also because of being a vassal state of the US, they tend to stick their chest out and make outrageous statements that upsets the Chinese. And therefore they have to be extremely careful that it's one thing not having cheap Russian energy, it's another thing increasingly not having access to Chinese markets in the process. Now, what's also interesting and worth noting with regards to the United States, for all the bluster of all this trade war with China, if you look at imports and exports between China and the United States, for last year it was about $688 billion. But China's exports was about $524.5 billion. And the imports from the United States was only $163 billion. So this trade war has done nothing, because it's been ongoing for 8 years and continues to be the case. And in fact, if you look at Chinese exports to the United States, they grew 4.9% year on year. Imports from the United States fell, 0.1%, but it still fell. So the US isn't doing anything to address that imbalance. And then you look at the ASEAN countries trading with China, and imports and exports for the two countries grew 7.8%. And that market is continuing to grow in some countries who China's supposed to, have serious problems with, like Vietnam. Imports and exports grew 13.5%, and the list goes on and on. I don't want to just spend the whole podcast detailing those trade relations, but they're clearly growing with the ASEAN countries. They've fallen with Japan a little bit, same with South Korea. Australia also fell. Overall, imports from Australia fell 10%. And this is how China's rotating not only its internal economy, and this is why its imports are not growing as much as its exports, because it's manufacturing a lot more high-end goods inside its own country. It doesn't need to import them anymore. But if this continues, the West is going to suffer more and more from a lack of both accessibility to the Chinese market and China being willing to export to those countries, because at the end of the day, why do they need the grief of the United States putting tariffs on goods? Just find another market and export to them instead. because China sells at the same price to other countries. So pretty much, so it's not a problem for them. They don't have any issue with this. Because remember, at the end of the day, one of the big problems you have in the West with the prices you pay for Chinese goods is the big markup we put up on them in Western countries as opposed to the price that China actually sells them at. So overall, China just continues to go from strength to strength economically. And just a point I want to make about this whole bond market issue, because it's getting absolutely ridiculous. The price of Chinese bonds across the entire yield curve are rising. And apparently that is a bloodbath. Well, it isn't. It's the very opposite of a bloodbath, because yields would rise sharply if bonds were being very heavily dumped, whereas yields are falling. If yields were rising because of this dumping, that would signal a bloodbath. That's why when we had the sovereign debt crisis in the European Union, Greek bonds went through the roof because everyone was dumping. So the yield was extremely high. I can't remember the exact figure. It was over 10% at one point at the long end, well over 10%. Now that is indicative of the fact that there was a bloodbath because everyone was terrified of holding Greek debt because they thought Greece was going to default. So how could that be a bloodbath? And this again is just indicative of statements made about China that have no basis in reality. And it's just, I think, largely a fear. It's fear and an indirect acknowledgement of the strength of China economically, financially, geopolitically, but trying to find a way to try and explain it away. And at the end of the day, it's meaningless because you can tell people 100 stories that aren't true. It's not going to change anything. It's not like China's suddenly going to collapse because a bunch of people on social media write statements that are factually incorrect. It's just a very, very puzzling kind of situation. And you have to wonder why they really think there's any motivation in doing what they do. Do they seriously believe it's going to impact China's economy internally or externally, or impact the yuan or its financial system? It makes not a scrap of difference.
You know, when you take a look at the big difference, and obviously you mentioned bonds, and we did a podcast regarding those the other day. If your bond yields are, and I'm doing it relatively low compared to the bond yields across the rest of the world. The Fed has lowered the Fed funds rate, but the 10-year has gone beyond that, screaming, of course, inflation. So if in China it's doing the opposite, that is indicative of the fact that they really don't have that great of inflation, especially for consumer prices or for their exports. And this is especially tied to the fact that they've been able to get cheaper energy from Russia, from West Asia, etc. While in Europe and the United States, they've had to deal with their, shooting themselves in the foot by creating the environment where they have to pay more for energy. So you've already got that type of inflation coming in. You don't have the massive money printing that's been done. And rather than using a hammer and a nail theory, which the US does all the time, or the ECB, by printing money when there's a problem, China has a tendency when there's an issue that they surgically go in and deal with it. Obviously, we're talking about the housing bubble that was taking place about 18 months ago. That has pretty much been settled out. And if people were putting their money into their homes as an investment, driving up prices that affected the population itself being able to find residences or being able to find housing. Well, China has in the meantime promoted them taking their money, instead of putting it in their house and driving up the price, they're buying gold, silver, and other things like that. Why? Because that's a liquid asset that can be sold at any given time. You're going to save your store value, and then you can use it to pay for whatever you need. Here in the West, it's pumping up the stock markets because we're into financialization. The economy in the eyes of the West is the stock markets, is the banking industry, it's the corporations. It's not the general economy. They really don't care that your wages aren't going up, that you can't afford rent, that you can't afford groceries. And we see this with some companies in the aerospace industry. We see this in the chip companies. NVIDIA has come out with making claims that they, despite all the money and that they're the market cap, they're not going to be able to support the goals of their chips for at least another 3 to 5 years. So all that currency and all that credit that's been pumped into the system in the West is not producing anything. While in China, when they do actually produce some type of stimulus, it's surgically for a specific purpose. And more often than not, it usually hits the mark. It's not wasted like it is here in the West. And we see this, of course, with the philosophy that the US pretty much is reactionary to events, while China has been building these 3 and 5 year plans. So they're prepared, they're doing the preparations before, similar to the way we've talked about Russia did about one month to or 1 year to 18 months of preparation, knowing all the different things that the US, NATO, et cetera, would do to them, and they were prepared for all of these sanctions, all of these military support of Ukraine, et cetera. They were prepared for that before the conflict even started. This, to me, is one of the biggest differences between the West. Everything's reactionary. They're content with the status quo, and they're unable to deal with events or crises that come about, and they just throw currency or print money at the problem and hope it goes away.
Yeah, absolutely. And I think a final point I'd like to make on this, which is just to reinforce what you've said, Ken. If you look at China's overall GDP, it's likely to be around about 5% for 2024. And what's China's GDP built around? Industrial and manufacturing prowess. They're leading in many new technologies. We've talked about electric vehicles, in AI, and they're now starting to take more and more of a dominant position in even semiconductors, integrated circuits, for example, and just everything that industrial and manufacturing means across all sectors. And they're building infrastructure domestically, which, if people go to, I know people who've gone to China in the last few years, completely blown away by the quality and the infrastructure that supports the country compared to what we have in Western countries, the US, the UK being two obvious examples. And in contrast, what does the United States do? In the late 90s, early 2000s, it outsourced everything all over the world, and including China. China went, yeah, fine, we'll do that. And they turned these into really successful businesses. And they completely changed the whole footing of international trade and commerce when they reenacted the Belt and Road Initiative. And the US GDP effectively is built around the idioticness of financialization. So it's all about bloated debt credit bubbles, asset classes, equity markets, bond markets, government spending, recycling debt, financial speculation, the military industrial complex that actually is of no benefit whatsoever to the US economy in reality. Yeah, it makes certain people extremely rich, but doesn't do anything in reality. And even ridiculous things like prostitution is included in GDP figures. So when you strip out all the financialization that benefits no one except a few, relative few, and you actually leave what you might term the productive economy, China's economy is many, many times bigger. And China continues to grow and expand in terms of being actually an economy that values producing stuff and selling it at a profit domestically and internationally. It's rotating its economy. and the West is oblivious to this and even understanding what that means in terms of its economy now also is not in the future going to produce the very cheap end stuff that it did. It's slowly phasing that out, and it's moving those markets to other countries and still selling it on to the United States, who thinks it's buying it from Vietnam when it's not. Effectively, it's buying it from China, or China provides the components and then they're assembled in Vietnam, but it's effectively made in China with a made in Vietnam badge on it, for example. And China continues to have a domestic economy where people want to consume more high-end goods. And China's starting to produce those high-end goods, which, so, I've said this before, I've bought clothing from China that is very cheap, very high quality. The customer service is superb. They don't charge me any postage. They keep me informed all the way along exactly where the parcel is, the day I expect to get it, and it arrives on that date. And when it's arrived, they contact me asking me, am I happy with the goods? If there's a problem, please send them back, and they'll provide the postage, so it doesn't cost me anything to send them back either. And that's customer service. And they will sell quality stuff at very, very affordable prices. I can buy clothing for probably a third, maybe even a quarter or a fifth of the cost that I can in the West. So, China is now providing those quality goods as well domestically, that rather than in the past where they do have imported those into the country. And that is a success story. That's what economies need to be, rather than what we're seeing in the likes of the United States and the United Kingdom and European countries.
Absolutely. And one final thing I'll make in sort of a point to distill this all together. The U.S., instead of working with China, when China cut them off from the rare earths, their, of course, reaction is to seize Greenland. And then, of course, because TikTok is a social media platform that they cannot control, they are banning TikTok. But guess what? Almost overnight, the number one application at the Apple Store is another Chinese social media platform called the Little Red Book. That should tell you that people want China and they don't want what the US is trying to do by keeping them out. And we're going to see how that goes in the future, because as of right now, the US can't compete, and they certainly aren't going to do it for quite a while. Paul, I want to thank you as always for being a part of this great discussion and for your insight.
Yes, and likewise.
And to everybody here at the Sirius Report community, thank you for all of your support. Don't forget to like, subscribe, share, comment. Send this out to anybody you think it might be important to. And until the next time we get together, have a great day.